And we are live. Welcome to the pre-market overview. Today is Friday, June 26th, 2020. Slight typo there on the slide. It is June 26th, not June 24th. Happy Friday, guys. Hope you've had a good week in the markets. Obviously, we've had some interesting things that have happened. Today's obviously the last trading day of the week, so we're going to get into today what we might expect from the markets upcoming. For those that have never seen an overview before, just to explain what we do. The main point is that I'm going to go through our newsletter. If you're not already subscribed to the newsletter, you can email us at newsletter@tradictive.com and we can get you subscribed to that so you can get it every day. And then basically the document that I go through today, you'll have for yourself to go through at your own leisure as well. So I'm going to go through the newsletter, and part of that means that I'm going to go into 4 of the major markets in the world, what direction they're going in at the moment, how long we think they're going to continue going in that direction, where we think markets could turn, volatility in the markets, as well as news that could impact it. So quite a lot to cover in 15-20 minutes. Just to highlight here, if you have any questions or queries or anything, you can always get me, Becky at tradictive.com, but always better to get the support team, support@tradictive.com. They are normally quicker at responding. So if you need us for anything, email us on that. Just going to read the disclaimers. Before I do so, or as I do so, I guess you guys can have a look at the upcoming sessions that we have. So today being a Friday, we have options at 9 a.m. Eastern and futures at 1 p.m. Eastern. And then you can see what we have going on the rest of the week. Mondays, Wednesdays and Fridays is when we have futures and options. Stocks and investing are on Tuesdays and Thursdays. And we have sharpening sessions that are both for methodology and for psychology over the weekends. Upcoming live courses, the stocks class finishes today. That's the last day of the class. The next live course that we have is the trading plan class this weekend. That's one I'll be taking. Then we have psychology mid-July and stocks towards the end of July. So you guys can have a look through those dates whilst I read the disclaimers, and then we'll crack on and go through the newsletter. So the following videos, clips, demonstrations are for educational and instructional purposes only. Tradictive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only, and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through the demonstration do not indicate in any way the results you may receive on using our products. The following presentation is for educational purposes only. All the symbols and trading ideas discussed are for demonstrating and are not recommendations. Active options and futures trading carries a high degree of risk and may not be suitable for all traders. Past historical trading performance of real or simulated trading does not guarantee success and may not be indicative of future results. You Can Trade is an online media publication service which provides educational investment content and ideas, along with live trading demonstrations, and does not provide investment or trading advice, research, or recommendations of any kind. Please visit www.youcantrade.com for additional disclosure information. Right, there we go. That's that bit done. So let's crack on and have a look at the newsletter. So if I just scroll in a bit here, make it a bit bigger. So as I said, we're going to go through 4 of the world's major markets. So we're looking at the S&P. So obviously one of the biggest equity indices or indexes. We have oil and gold, which are both commodities, obviously one in the form of metal, one in the form of energies. And then we have the euro, which is the biggest currency in the world. Well, the euro versus the US dollar, most transactions in terms of spot Forex, and the US dollar itself is responsible for 80% of transactions worldwide. So we've covered quite a lot of what goes on out there in the markets. And even if you don't trade these things directly, you might trade markets that are correlated to it. So at least, again, you can see what might be going on out there in the general markets. Now, you'll see that we are covering the daily chart for each of them. So that's the time frame that we're going to be looking at. Again, hopefully that falls somewhere into the analysis that you normally do. We're going to go through climate. What we mean by climate is basically trend. In what direction is this market movement? Is it in an upwards climate? Is it in a downwards climate? Or is it sort of undecided? Now, the technology that we use in order to determine the climate is the Auto Climate app, and that's what helps us to figure out in what direction these markets are going. Propagating basically means how far we expect those markets to continue. So based on probabilities and statistics, how long does a market go in a particular direction, and how long are we likely to still be in that movement? And nearest UFOs, UFO stands for unfilled orders. What that means is where we expect there to be a big stack of buy orders that could turn price up, or a big stack of sell orders that could turn price down. Again, we're using the Auto UFO app to find these on a chart to see where price could turn, see where these climates potentially could change. I'm going to go through them one by one. As we go through them as well, I'm going to come down to market volatility and talk about how far we expect these markets to move within given time frames. So we'll start with the S&P. The symbol we're using is SPX.X. So let's go to TradeStation here and have a look. So we have SPX.X daily chart. You see on the bottom here, we have a thick red dot. Now, being a red dot, the Auto Climate app is telling us that the market is in a down movement, down climate, downwards trend, downwards environment. Being thick, that tells us that it's confirmed. That just means we have more probability on our side here. If we were to get into a trade that followed that trend, the confirmed nature of the climate gives us a bit more probabilities here. Now, in terms of UFOs, orders that could turn price, let's just unscrunch this a bit so we can see these a bit better. So we have buy orders at 2955.45 to 2933.59. That's the closest buy UFO where we would expect there to be orders that turn price back upwards. We also have a sell UFO that looks like it formed a couple of days ago, 3131.29 to 3154.90. That's where we would expect price to turn and go back down because it hits a big stack of sell orders. Okay, so understanding the S&P, we saw that we were in a confirmed down climate. That's what this tells us here. This downwards pointing red arrow on the newsletter, that's what this shows us. Now we want to understand is how far is it likely to go in that direction? So what we can see here is that normally the S&P would go down for an average of, I'm going to round this up, 5 candles on a daily chart. So 5 days, and we are on candle number 1, meaning that we have odds in our favor that if we were to get into a trade that followed that climate, that could continue for another few days. Now, again, that's not to say this happens always, okay? This is based on technology, probabilities and statistics that sort of give us an idea of what's more likely to happen and put odds in our corner, but that's not to say it happens 100% of the time that way. But we do have a confirmed down climate and a bit of room for us to continue that with our propagating figures. We also have our UFOs that we saw on the price chart, which gives us an indication of where and when price might move. Now, staying on the S&P, I'm going to come down to the market volatility. Now, what we mean by market volatility is how fast we expect markets to move, or how far we expect them to move within given periods of time. Now, we get the original data on this from the options of these markets. Now, for those that don't know options, options are mainly traded by professional traders, especially in these big markets. So when professional traders are trading the price of options, when they're trading options, they're setting the price of them. So what that means is whatever they're willing to buy and sell for these options is sort of reflecting the risk that they are happy to take when it comes to exercise or assignment, which is very much linked to how far they expect prices to move. It's basically a long way of saying that the professional options traders are setting the price of the options based on what they think will happen in terms of volatility. So the numbers we get here come from professional traders' opinion on how far price will move. Now, all of the numbers on current implied volatility are annualized. So for the S&P, we're using the VIX here, and this is where we get these numbers from. And what we can see is that in 1 year, we would expect movement based on the options price. We would expect movement of 32.29% in 1 year on the S&P. That's what that means. Now, if we reverse engineer that, we can figure out that that means a movement of 62.73 points in a day, either up or down. In a week, we would expect movement of 138.09 points, either up or down in 1 week. And in a month, we would expect a movement either up or down of 287.45 points in 1 month. Okay, so that gives us an idea of how fast price might move or how quickly it might move. And the climate and the propagating figures in the nearest UFOs help us figure out in what direction it's likely to move, for how long, and where we might see a change in price. Okay, so moving on to oil. So you'll notice with oil up here, we are using @CL. That is the continuous futures contract for oil. That's where we get the figures for this. Let's go and have a look at the chart. So @CL. Here we are. Okay, I'm just going to scrunch this a bit so that we've got everything a little bit bigger. Okay, so you can see at the bottom, it's a thin dot, so it might be a little bit hard to see, but thin for a reason. It's red, so what that means is that we're in a trend to the downside, a climate to the downside, or a downwards environment. However, it's thin, so what that means is it's not confirmed. So we have less probabilities on our side here. So if we were to get into a trade that followed this climate, we do have less odds in our favor because it's not a confirmed climate.
Now, when it comes to UFOs that could turn price, we have the closest buy UFO down here, nestled on top of another one, at 25.87 to 25.36. That's the closest buy UFO. Obviously, we can see quite a way from current price at the moment. Then we have a sell UFO, literally just above current price there, 40.37 to 41.63. Again, that's where we would expect there to be sell unfilled orders. That could push price back down if price were to reach that area. Okay. So we saw that we were in an unconfirmed down climate. That's what this shows us here. So we've got a little cross next to the arrow that shows us that it's unconfirmed. So unconfirmed down climate. Now, let's understand how long it's likely to do that. So what this shows us is that normally oil would go down for, again, I'm going to round this up, 9 candles on a daily chart. So 9 days, and we're on candle number 2. So we do have probability or statistics on our side here that if we were to get into a short position, that we have more room for that to continue to the downside. But like I said, bear in mind, the climate is unconfirmed, so we lose a bit of probability there. We've got our sell UFOs just above current price and buy UFOs a little way up below, as we saw on the chart. So moving down to the implied volatility. So let's understand the movement we would expect on oil. So we can see that in a year, we would expect movement either up or down on oil of 62.69%. That's the annualized number. So what that means is in one day, we could expect movement of 1.54 points, either up or down. In 1 week, it would be 3.40 points, either up or down. And in 1 month, it would be 7.07 points, either up or down. So again, that just gives us an idea of how fast oil is likely to move. So let's move on to gold. So gold, you'll see we're using at GC. So once again, it's the continuous futures contract for us to be looking at the price of gold and these stats on gold. Let's take a look here. Just going to scrunch it again, a bit more there. Okay. So you'll see down here, we have a thick blue dot. So being blue, the Auto Climate app is telling us that the market is in a general upwards trend, a general up climate, up environment, and it's thick, meaning it's confirmed. So again, we have slightly more probabilities on our side here because it is a confirmed upwards climate. Now, in terms of closest buy UFOs, we've got this one here at 1668.3 to 1647.0. We can actually see it's already hit. Still a valid UFO as it's still on the chart, but it just goes to, I guess, show the point that once prices hit UFOs, they tend to turn, and that's exactly what's happened here. In terms of closest sell UFO, we've got this one up here, so I guess we're about halfway between the two at the moment. We've got 1863.6 to 1879.0. Okay, so that's the UFOs we have on gold. Okay, where am I? So gold, in terms of the climate, so we saw that we had a confirmed upwards climate. That's what we have here. How long is it likely to go on for? Now we can see that normally gold goes up for 6 candles. Once again, I'm rounding up that number. 6 candles on a daily chart, so 6 days, and we are on candle number 13. So we are more than twice what is normal, what is statistical, what is probable on this market going in this direction. So it means that we're overextended. Again, we have less probability that this climate is going to continue. The more you stretch an elastic band, the closer you're going to get to it pinging back. So although we have a confirmed up climate, just be aware that we are overextended there. And like we said, we're about halfway in between the UFOs. So again, be interesting to see how that plays out. And if we have new orders that come into the market, that might turn. Okay, so in terms of volatility for gold, for the numbers for this, we get it from GVZ.X. I can't remember if I said this for oil. For oil, we used OVX.X. So GVZ.X or GVZZ, whatever it is, .X for gold. Current implied volatility for the annualized number, 19.73%, either up or down in 1 year, meaning that we would expect movement on gold of 22.1 points, either up or down in 1 day, 48.6 points, either up or down in 1 week, or 101.1 points, either up or down in 1 month. Right, last but not least, let's move on to the euro. So once again, we're using the euro versus the US dollar. So this is spot Forex. That's where we get these figures. I'll go back to this one for that. Euro, US dollar. Here we are. Okay, so I'm just going to scrunch this down so we can see our sell UFO there. Maybe do that a bit. There we go. So once again, we can see here that we have a thin dot, which shows us that it's unconfirmed. It's a red dot, so it means that we're in a downwards climate. In general, this market is moving to the downside, but It's a thin dot, so it's unconfirmed. Again, less probability that a trade would work out following the climate if it's not a confirmed climate. So closest buy UFO, again, looks like we've touched it a couple of times, just reacted to it yesterday. The numbers are 1.1168 to 1.1070. I've just rounded those numbers to the pips they need to be rounded to. Closest sell UFO is quite high up there at 1.1740 to 1.1816. Once again, just rounded those numbers where they need to go. So again, like we said, we've just hit this buy UFO, so again, be interesting to see what happens there, although we do have an unconfirmed climate. Now, despite the fact that it's unconfirmed, let's understand how far we're likely to go in that direction. So normally the euro versus the US dollar would go down for 4 candles on a daily chart, so 4 days. And we can see we are on candle number 2. So we're about halfway into that climate based on what probabilities and statistics suggest. So again, be interesting to see what happens there. It looks like we've got a few forces working maybe against each other at this time. Be interesting to see how that plays out. We scroll down, let's understand the volatility here. So we have EVZ.X or EVZ.X. The current implied volatility for the year is a movement of 7.95% either up or down in 1 year on the euro, which means in a day, we would expect movement of 56 pips either up or down. In 1 week, we would expect a movement of 124 pips either up or down. And in a month, we would expect movement of 258 pips either up or down on the euro. Okay, so hopefully that gives you an idea of the volatility that we would expect, meaning how fast we expect these markets to move, in what direction they're likely to move in, for how long they're likely to move in that direction for, and where there could be orders that could turn price. So hopefully that gives you an idea of those things for those markets. Just coming down here, I'm just going to highlight the upcoming, well, I say upcoming, this was this week's high impact news. And as we can see, the only thing that happened this week in terms of high impact news happened yesterday. The figures have all come out and they are in this column here. So if the figures have come out, they'll be under the actual column, and that's where you'll see the numbers. If it's blank, it means it hasn't come out yet. Now we get this information from, there you are, from fxstreet.com/economic-calendar. So you can go to that link if you want to look at markets that aren't the US markets, because that's what we're looking at here. Or if you want to look at news that has different levels of impact as opposed to just high impact, that's what we're looking at here. You can go and play about with those filters to make it fit your trade plan a little bit better. But like we said, there's nothing really going on today. So we'll see what happens next week in terms of the high impact news that will come out next week. Okay, a couple of reminders before we wrap up. So just to say, if you're not already subscribed to the channel, you can do that at tradictive.com/youcantrade. There is a free 14-day access. So if you're not sure, you want to just try us out, you're not sure if it's something you really want to do, you can try us out for 14 days, see if you like it, and then go from there. In terms of courses, like we said, the next live course starts tomorrow, and that's the trading plan course. Sorry for the background noise there, guys. That's the trading plan course. You can get to it through that link there. You can register for any course and choose an additional course for free. So if you have one course, you can get one of equal or lesser value, kind of like a buy one, get one free situation. So go to the website and you can have a look at how that works out. Okay, so all that's left for me to say is have a good weekend, guys. Hope you've had a good week in the markets. I hope you have a good day today. We've obviously got options and futures coming up in the channel today, so hopefully we'll see you there. Hopefully some of you will join me over the weekend and I'll see you there as well, helping you guys out with your trade plans. At 4:15 p.m. Eastern, my colleague Boyan will be looking at what did happen in the markets, what went as planned, what didn't go as planned, and sort of analyze it from there. So we'll see you in some of the sessions, I'm sure, today. If not, take care, have a good weekend, and we'll see you next